got this cooler CPI report yesterday, and the narrative seems to be that the Fed may have time to breathe and slow down rate hikes in 2023. But do you think that's too presumptuous, given prices are still 7.1% higher year over year? That's pretty high, no?
It is pretty high, and it's great to be with you, Kristina. The Fed has no room to breathe, so let's not get that twisted. The 7% is too high. It's way above the 2% target. I think what they have is two stories to keep track of. They have a good sector story, which is improving. If you look at the good sector, if you look at the supply chains, if you look at the things, the stuff of the economy, you're seeing inflation and prices cooling. That's great news. That's what lowered inflation last month. But if you look at services and you tie that into the very survey that Tyler just mentioned about finding qualified workers, that's where you see the action on prices. Wages. Wages are still accelerating at a very high level, much higher than before the pandemic, much higher than the 10 years of expansion that led into the pandemic. And so that's still a concern for the Fed, because if that gets entrenched into the economy, they have an issue that time won't heal. And so that is a really important consideration as we move into 2023.
Nela, just yesterday after the bell, I reported on a company called ABM, and one of the CEOs or an executive members said that they are concerned about 2023 and they believe the labor market will continue to be tight. Now, is this something that you believe is still a problem for small businesses, or is it specifically for larger? Is there a difference between both?
Yeah, the complexity of the labor market is it didn't all recover in the same way. First of all, let's just say it clearly. Small businesses are the engine of growth when it comes to jobs in the economy. They created 2/3 of the net new jobs in the 10 years leading up to the expansion. I should say all of you. Not only that, small businesses were the first to start hiring after the big pandemic-driven downturn. But what happened during that recovery is that they were outpaced by wage increases that larger firms were able to offer. Now we're seeing firms that were intensely hiring during the pandemic, like tech, start to pull back, start to slow their hiring. And so for small firms still trying to add headcount, this is an opportune moment, a moment to really take advantage of what seems to be a slowdown for larger firms to actually add to headcount into the new year.
But then how do you compete? Because they had just received a much higher salary at a large tech firm, and now you have a small business that's willing to offer them a job but can't really match the salary.
Well, competing for tech workers is one thing, and you might have an opportunity there, especially if tech workers are looking for new industries and new ways to be absorbed into the economy. But really, where we're seeing the shortages are in consumer-facing industries: the restaurant industry, the hospitality industry, leisure and hospitality, healthcare, education services. Those industries have not fully recovered, and small firms in those industries are still looking to add headcount. Wages is one way. We know that hybrid work is something that the workforce has been asking for and is finally starting to acquire. There are ways to engage this new workforce, but it does take work. It is a challenging hiring environment, and I think that continues in 2023.
We talked about hiring, but I want to talk about retaining. I watched one of your videos online last night, and you said that small businesses, I don't know if you were referring to a recent survey, but small businesses are looking to retain current employees rather than rehire. Can you just elaborate on that, please?
Yeah, it's really costly to hire and train a new worker in any industry. It's very difficult. And so what we have seen businesses do during this uncertain time in the economy is be very reluctant to let go of headcount, and also to want to keep, inspire, and engage their current headcount. And so this is a big concern for small firms. It's not just about hiring, it's how to retain. And you can't just keep increasing wages to retain your headcount. How do you retain a workforce that's happy and engaged without just giving them a bonus? The way to do that is to offer things that workers care about, like training, development, career progression. All of those things lead to a fulsome relationship between employee and employer. And I think that renewed attention to the health of the workforce is going to be critical in 2023.
So you said things that people care about, and I would assume flexibility is part of that mix. So what are you seeing in terms of small businesses and how they can provide that flexibility? And I'm thinking more the hybrid work model.
Yeah, well, it's really interesting because we've surveyed workers around the globe. ADP is in 140 countries. We've surveyed 33,000 of the global workforce. We've surveyed here in the United States, and the results are remarkably consistent because we've all gone through a global pandemic. People care about their time. It's not so much about whether or not you work from home. It's having more autonomy of your schedule. We've evolved in a very short time period as a workforce to realize that we are not different people when we go on site. The same concerns that we have at home, we have at work, and we need more flexibility to pick up a child who's sick at school or to take a parent who's sick to the doctor or have a little more adaptability and time management that is independent of a work schedule that may not even serve the customer. And so businesses who recognize that and can evolve their business practices to support workers and customers are the ones who win in the talent war, whether it's retention or hiring.
What about the quality of the talent and research from ADP? It seems like quality is an issue, right?
Well, finding qualified talent is important, and that involves tenure, right? You don't want to have to replace a worker because that's costly, as we stated. But training is really important in that. In a time when things are up in the air, when there is uncertainty, but business practices continue to evolve, even small firms continue to embrace technology, labor-saving technology, AI, machine learning, all these new technologies at the forefront of the workforce. It's really important that you train the worker along with your advancement, that you don't leave your headcount, your employees behind as you evolve your business. And so there's going to have to be a new consideration about skill development, what that means, how you partner with community colleges, with local organizations to make sure that not only that you have the quantity of workers you need, but those workers are skilled up for the job that you need them to do.
Are smaller businesses telling us that maybe a recession isn't necessarily the outcome for 2023, given smaller players are still looking to hire, they're not laying off employees?
Small businesses are telling us a lot of things. I mean, think about the quantity of businesses that were started during the pandemic. Like started in the heart of when the world was on fire from an economic perspective. Small businesses have a level of adaptability and ingenuity that will serve them well in an economy in transition. Look, there's been a lot of talk about recession. One thing we know, it's going to be a very weird one if it happens, because what we're seeing now is an unemployment rate near record lows, a home inventory level at historical lows, and consumer debt near historical lows. So the starting point going into 2023 looks like a strong one, and yet there's all this uncertainty with inflation and interest rates. Small companies who are not going to get faked out by the big number on inflation, but can adapt and see the opportunities within the uncertainty are the ones who win. And that's what we're telling our clients. Recessions are somewhat an academic question. We won't know until after one is over whether we were even in one. But the idea that you know your customer and you know what your customer needs now, that's always going to happen. That's always going to be a strength for you as a small business, no matter what the economy is foretelling you.
Yeah, you're right. No one has a crystal ball, and we constantly ask this question. But I just wanted, you mentioned consumer debt being at an all-time low, but what about small business debt? Isn't that climbing, especially with rates continuing to increase? And is that a concern going into 2023?
That is a concern. And it's not just a concern for small companies. If you look at even tech companies that were born in the last 25 years, many companies have never seen a federal funds rate at the climb to the rate where it's expected for this rate to go. So borrowing costs across the board for consumers and for companies, especially small businesses, are rising. And so keeping an eye on cost is going to be a critical part of the business plan going into 2023. There's no way to get around it, because my expectation is not only that the Fed continues to raise short-term interest rates, which are the benchmark for a lot of small business borrowing, but they keep rates elevated for some time to come to make sure that inflation is finally put to bed. And so that's going to be not just a 6-month long holding at a higher rate. I think it's going to be through 2023 where we're seeing a very elevated short-term rates that affect borrowing costs for smaller firms.